Hey guys, thanks so much for tuning into the channel today. And guys, there's no doubt that 2022 was a roller coaster ride for the real estate market. And I think it's very safe to say that we all had a front row seat as we watched inflation spike out of control as the Fed dropped the hammer on the Fed funds rate, which obviously resulted in mortgage rates climbing at the quickest pace than they ever have in such a short period of time. And as home prices remain at all-time highs, guys, although they have softened and come down a little bit, here we sit with an affordability issue that is affecting so many buyers and challenging their dreams of home ownership. So what does 23 have in store for us? Will home prices continue to fall, and will interest rates follow suit to help try to stabilize this housing market? And I guess we'll just have to wait and see what 2023 brings. And in today's video though, we're gonna take a look at a new report from Realtor.com and compare some data from 2022 to the pre-pandemic era from 2017 through 2019. And stick around to the end because I'm gonna show you some local data right here in Charlotte as I show you what happened last year in 27 specific zip codes. But before we get there, understand that the data that we'll be looking at today is on a national level and not Charlotte specific, although I do think the trends we're going to see for the most part fall in line. And hey, if you're new to the channel, my name is Brian Taylor and I'm the owner of Dreamline Realty right here in Charlotte, North Carolina. And if you're a returning viewer, thank you so much for coming back to watch this one. Okay, so let's jump into the report. All right, guys, so looking at the January 2023 monthly housing market trends report, it says that according to Realtor.com's January housing data, the number of homes for sale is continuing to grow compared to last year as time on market slows, but home inventory is still below pre-pandemic levels. Larger annual declines seen previously in newly listed homes and pending home listings have started to moderate, and the decline in the median home list price growth rate has also moderated, potentially signaling lower but stabilizing housing market activity. For buyers, a slower pace of home sales and more inventory provide more opportunities to find their ideal home, but prices in most areas across the country are still higher than last year, and interest rates continue to cut into home affordability. So basically what they're saying here, guys, is that the number of homes for sale is increasing and homes are taking longer to sell. But overall, inventory is still below pre-pandemic levels. It's also saying that the large declines in newly listed homes, homes that are under contract, and median home price growth are showing signs that could lead to market stabilization. Now, let's get back to the report and take a look specifically at active listings. Okay, so there were 65.5% more homes for sale in January compared to the same time in 2022. This means that there were 248,000 more homes available to buy this past month compared to 1 year ago. And while the number of homes for sale is increasing, it is still 43.2% lower than it was before the pandemic in 2017 to 2019. So let's go ahead and take a look at this graph right over here. And one thing I want to point out to you guys is this little pink dot right here is January of 2023. So let's go down and take a look at January of 2022 right here. There was under 400,000 currently active homes for sale. And now in January of 2023, that has risen to 625,875. That's where we're seeing the increase of 65.5%. But let's go up here to the top because this chart is showing us all the years from 2017 all the way through 2023. And you can see in 2017, 2018, and 2019, every one of those years had over 1 million homes that were currently active on the market. And we sit right here at only 625,000. So that is where we have this huge decrease in the active homes listed for sale. So we are certainly well below inventory levels. But one thing I want to point out to you that's very interesting, and as I go through some of these charts, I want you to pay attention to the months between April and June. So as we started, we once again said January 2022, just under 4,000 homes for sale. And we saw a decrease going into February, a little bit of increase in March. And look what happened when we hit April. That huge spike in homes for sale, guys. And that is because in April is when interest rates started to rise. This makes complete sense. As interest rates went up, home buyers pulled out of the market, houses stayed on the market longer, which increased that number of active listings. The other reason we saw this big increase as well, as home sellers started to see these interest rates rise, a lot of sellers came to the market trying to cash out at the highest price that they possibly could because they feared interest rates were going to continue to rise, which they did, which was going to potentially, and it did, pull more buyers out of the market. So we have a twofold thing happening there. So as we hit July, you can see a little bit of an increase, kind of leveled off as we got through August and September. And that is mainly due to seasonality. And as we get into the fall months and the winter months, you can see the active listing count fall. And that goes right along with every other year due to seasonality. So guys, now I want to shift gears here and talk about pending sales. Okay, so it says the number of homes under contract or pending listings declined by 31.9% compared to the same time last year. This is lower than December's 36.8% decline, which could mean that the housing market is starting to stabilize. However, this could change if the direction of inflation and mortgage rates changes in the months to come. While mortgage rates are down from October and November of 2022, higher rates and home prices compared to January of last year have increased the monthly cost of financing. Now, this is saying 80% of the typical home. That means that people that are putting down 20%, right? So the cost of financing a home, if you're putting down 20%, has gone up by nearly $650 per month. That's a 49.6% increase compared to a year ago. So let's go ahead and take a look at this chart. Once again, looking at January of 2022, we had just under 450,000 homes that were under contract. And as we look at January of 2023, that's a decrease of 31.9%. Now, what's interesting about this, if we go down here and look at 2017, 2018, and 2019, there was only about 260,000 homes that were currently under contract in those years. So in 2022, that was a pretty big increase, but we have fallen back down here to roughly 300,000 homes, all right, for 2023. So when we look at 2022, we see an increase through January through April, which is pretty typical for every other year. It's the spring market. Most people are buying a home in the spring. They're trying to get moves made before the school year starts for a lot of people, or people that are relocating, wanting to get their kids into the school system once again before school starts. But again, when we hit the months of April through May, we're starting to see a little bit of a level off. But when we hit really the month of May and June, we start seeing this big decrease in homes under contract. And once again, that's because interest rates started to rise. Buyers were pulling themselves out of the market. And as we get towards the fall and winter months, we are leveling off, guys, at a quicker pace than any other year on this chart right here. So that's a pretty big decrease. But look at what happened in 2020. So this is the 2020 line. As you remember, COVID hit right here in March. And we had, 6 weeks of lockdowns. The housing market pretty much was at a standstill, which we see this huge drop right here. But after the lockdowns happened and the rates came crashing down, look at that huge increase in homes under contract, guys. That is crazy. So I just wanted to point that out because what a difference just a couple years makes. So the report just said that with the decline in pending home sales, the market could stabilize, but it went on to say this. It says this could all change depending on inflation and interest rates. And if you've been following my channel for any length of time, you know that we talk a lot about interest rates on this channel. And over the last 3 weeks, we saw interest rates fall to 5.99%, which was a great sign of optimism. But that all shifted because as of today, they are back up to 6.62%. As you can see right here, according to Mortgage News Daily. So now let's go back into the report and take a look at newly listed homes. Okay, so in January, the number of homes newly listed for sale declined by 5.4% compared to the same time last year. This is a much lower rate of decline than last month's 21% decrease and November's 17.2% decrease. However, new listings remain 25% below pre-pandemic 2017 to 2019 levels. So let's go ahead and take a look at this chart. And as you can see, right here we are in January of 2023, and here we are January of 2022. So we are down 5.4% in newly listed homes on a year-over-year basis. But look how far below we are 2017, 2018, 2019, and even 2020. We are quite a bit lower than we were in those pre-pandemic years. But again, let's look at 2022. As you can see, the ramp up here in the springtime, pretty good steep incline. We kind of start to level off a little bit as we get through April and May, but we're still going up. But once again, interest rates started rising right here at this point in time. And when we got to June, that's when interest rates got over 6%. And you see a steep decline, a steeper decline than any of these other years, mainly because sellers were hesitant to list their house for sale. If they were sitting on a nice fixed interest rate of 2.5% or 3%, they have really no incentive to sell their house and then take a higher interest rate by making a move. So a lot of sellers decided to hold off and put their plans on hold, which is one reason why we're seeing that steep decrease here. Now, I want to go on and show you some information here in just a second about the 50 biggest metros areas, and we're going to talk about Charlotte here specifically in just a minute. But it says the number of homes for sale in the 50 largest metros in the United States has increased by 87% compared to last year. This is more than the national average. However, inventory in this group of metro areas as a whole is still 27.3% below pre-pandemic levels. It goes on to say down here that inventory increased in 49 out of 50 of the largest metros compared to last year. Metros which saw the most inventory growth included Nashville, up 303.5%, Austin, Texas, up 260%, and Raleigh, our friends just east, almost at 255% increase in new listings year over year. And the only metro to see an inventory decline on a year over year basis was Hartford at -8%. Okay, so the last piece of data I want to show you before we dive into Charlotte specifically, and then we're going to talk about those zip codes that I talked to you about earlier in the video. Let's talk about median listing price, because that's what everyone is wanting to know about. So it says the national median list price remains stable compared to December at $400,000 in January. However, it is down from a record high of $449,000 in June. That's down 11.1%. Says this median list price represents a yearly growth rate of 8.1%, which is only slightly lower than December's 8.4% growth rate after large declines for the past 6 months. And if we look at this chart, we can see exactly that. Once again, here is 2022. We had a median sales price of about $370,000 last January. Now we're up to $400,000. But as this mentioned, we were as high as $449,000 at one point in time. So as you can see, as we go through the January or the 2022 year, we saw the big ramp up in median listing price. And once again, once we got to the April, May, June timeframe when interest rates started to go up, a lot of sellers having to take price cuts because the buyers are just not there. And as you can see, the median listing price is starting to fall, which is great news for a lot of you watching this video right now. And we are trending down. We ended December of 2022 right at 400,000, and that's where it is saying it has remained stable, because here is January of 2023. Guys, my expectation is to see more of this decline as we head into the later months here of 2023. Interest rates again are going to have a big impact on how steep this may fall. or when we're going to start seeing some things leveling off. So now I want to take you over and show you exactly what's going on for some of these metrics right here in Charlotte. All right, guys, so let's take a look at the top 50 metros. I'm not going to go through all of these with you, but I do want to highlight on Charlotte right down here. So a few of these metrics show us that the median list price in the Charlotte area sits at $390,000. The median list price year over year has fallen. That's a minus 1.3% in median list price on a year over year basis. Let's talk about active listing count year over year. Active listings have gone up 130.2% from January of last year. And new listings are down 9.5%. And median days on the market is right now at 70 days on the market. That's an increase, guys, of 29 days from the same time last year. So again, houses are sitting on the market longer, taking longer to sell. And going right into that same theme, the price reduced share, that basically means that 18.5% of the properties that are on the market are taking price cuts. And if you like what I've shared with you so far, give the video a like. And if you haven't subscribed to the channel, consider doing so, as I'm bringing you videos just like this every single week to help my viewers understand what is happening in the real estate market on a national level, as well as what's happening right here in Charlotte. And speaking of Charlotte, in the beginning of the video, I told you that I was going to share some local data with you about what we saw in 2022 for the Charlotte area. And a lot of people have asked me about specific zip codes. And one of the questions that I always get asked is, how's the market? And are you guys selling a lot of houses? So with that question in mind, I wanted to show you a comparison of closed home sales in 2022 compared to 2021. So let's go ahead and take a look at that. All right, guys, real quick here. This is a year over year comparison of zip codes. I pulled 27 zip codes. And basically what I did, here is the zip code. I went back and looked at the 2022 closings, and then I went back and pulled the data for the 2021 closings and took a count change for each zip code. So for 28215, we had 1,136 closings in 2022 compared to 1,655 in 2021. That's a difference of 519, and that is a percentage difference of 45.7% to the negative. So I've gone all over the Charlotte area, for example, and I've categorized these from the highest percent of change down to the lowest. We've got everything from Northeast Charlotte here. We've got Belmont, the Freedom Park area, Westinghouse Boulevard, even down into Waxhaw. You get the idea here, but I've gone all around the Charlotte area and I'm showing you guys exactly what's happening. All of these zip codes, guys, are negative. Every single one of these is negative. Less sales in 2022 as compared to 2021. We could all probably predict that that was going to be the case, but I wanted to visually show you which zip codes are performing better than the others. And I've even gone into South Carolina for my South Carolina lovers. We've got Rock Hill right there, the University area, Concord, Fort Mill. And guys, as we continue to scroll down here, as I mentioned, everything here is negative, and we will have to see what 2023 brings when we do that comparison next year. But you know, we've got a lot of zip codes that are definitely in the 20s and 30s from a year over year decrease, but then we have a couple that are very, very, very small. So the Steel Creek area was only down 4.4%. We've got Rock Hill only down 3.4%, and then Indian Trail leads the zip codes at down just 2.2%. So I hope this was helpful for you. All right, guys, thanks for hanging out with me today. I really enjoy bringing you guys these market updates, and hopefully I'm providing you some kind of value to help you when you're ready to buy your next house. And one more thing, stay close to the channel and check out our newest series called The Mortgage Maze. I've teamed up with a good friend and local lender, Stephen Knorr with Alcova Mortgage right here in Charlotte. And we're bringing you a weekly video talking about specific mortgage topics that will help you along in your home search. And in our first episode, we explained what the 2-1 buy down was and how that strategy is helping people get into a house with a lower mortgage payment. And I'll put that video on the screen for you here in just a second. And if you need my help in your home search, just give me a call, shoot me a text, or my favorite, schedule a Zoom call with me so we can put a face to a name and talk about your situation. And there is a link to my calendar below in the video description, and that's where you're gonna find my contact information as well. All right, guys, thanks so much for watching, and as always, make it a great day.